Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello friends, we are all surrounded by some amount of anxiety as to what will happen in the winter of discontent ahead that people are anticipating in Europe thanks to the Ukraine crisis. And once the market bottoms out, which area of the market, which geography of the world will lead the markets higher? I'm Vijay Bhambhwani. I trade these markets since 1986, and through my videos, I want to help my online followers and family to take better informed decisions for their trades and investments so as to garner a higher return on investment. So on 23rd June of this year, I had recorded a video saying that this time around, the crisis or the decline, if any, a major decline in financial markets might just be triggered by Europe because of obvious reasons, the prevalent tensions, the geopolitical tensions in Russia and Ukraine. Now, I also recorded a video after that talking about the lessons learned from the Asian financial crisis of 1997-98. In that video, I told you that the Asian markets have learned many lessons and are planning to avoid any repeat of such events that transpired in 97-98. I did a recent study about which markets have done what from their recent all-time highs to the current price as I record this video on a Wednesday, and closing prices are as recent as I have them on my screen. So on your screen now is a list of what the Western markets have basically done. Toronto is down a little under 15%. France is down around 16%. Germany is down 18%. The US Dow Jones, old economy Dow Jones, is down a little under 14%. The new technology index, the Nasdaq 100, is down 27%. The Bovespa, which is Brazil, my veteran viewers will remember that I track Latin America very, very closely for the simple reason that this area, this geography, is responsible for a humongous amount of natural resources exports, especially metals. So Brazil being the biggest boy out there, I've taken that as a proxy. That has fallen a little over 25%, and the FTSE is down a little under 5%. Now this is the Western world. Though not completely exhaustive, the list will give you a somewhat approximate picture of how much the markets have fallen there. Cut forward to the Asian markets, where for obvious reasons, Taiwan, because of geopolitical friction between China and Taiwan, Hong Kong markets, because they are a proxy of China itself, and the Chinese market, which is in the eye of the storm itself. If you were to take these aside, you will realize that the Asian markets are weathering the storm, relatively speaking, a whole lot stronger, a whole lot better. So our very own Nifty 50, I start obviously with our own markets. Our very own Nifty 50 is down a little over 11% from its recent highs. The Japanese Nikkei index is down a little over 10%. Bursa Malaysia, which is Malaysia, is down a little over 11%. Singapore Straits Times Index is down a little over 8.5%. The Hong Kong Hang Seng Index is down 33%. Do remember what I told you, Hong Kong is a proxy for China. The Jakarta Stock Exchange is down a little over 6.5%, showing a good amount of relative strength. The Korean Stock Exchange, here again there's a pocket of weakness here, is down a little over 28% from its recent high. The Shanghai Composite Index is down a little under 11%, which is not half as bad considering what's going on there in the real estate market. The Taiwan weighted index is down a little under 21%. Do remember there is a sword hanging over Taiwan of a Chinese geopolitical attack. So, which is why Taiwan is down. The Thailand set index is down a little over 10.42%. So, as you can see, compared to the Western markets decline of 14, 18, 20 and 25%, the Asian markets, if you leave out Taiwan and Hong Kong, which are in the eye of the storm, geopolitically speaking, are doing 8, 9, 10 or 11% declines from their recent highs. Now, in technical analysis, this is called relative outperformance. So if one market is falling 20% and the other market is falling 10%, the market that has fallen only 10% is relatively outperforming a market that has fallen 20%. And this relative outperformance invariably sows the seed for strength when the tide and time turns for the better, which is why I think whenever the market discounts all the bad news about Russia, about Ukraine, about the geopolitical bargaining chip being used of natural gas, when the winter goes away and things start to turn back to normal, I think it will be Asian markets which will lead the charge forward. For obvious reasons, there is a very high probability that once the market starts to pick up the shattered pieces, if at all there is any damage, we don't know yet, we are just conjecturing, but if at all there is any damage, and if the market starts to pick itself up, dust away all the bruises and all, I think India stands to be a very high probability leader of the pack in the Asian segment, and Asia, like I told you, is likely to lead the rally upwards, which means we have a very high probability of being the leaders in the pack when the recovery starts. It's a matter of a few months. The winter will be gone by November end, maybe early December, and we'll know what would have happened by then, whether the Russians are supplying gas and oil to Europe or not. Winter, in any case, whether supplies come in or not, would have come and gone. The worst would have been over. I expect the Indian markets to basically look ahead of the initial speed breaker that you might encounter in the winter and plan far ahead in the future. Markets, as it is, are forward discounting mechanisms. There's ample amount of hope there yet. On this cheerful note, I'll bid goodbye to you, not before reminding you to click like on this video if you liked what you saw. Subscribe to my YouTube channel if you haven't already done so. Click on the bell icon to receive instant alerts about fresh videos being put up out here. Good, bad or ugly, I always look forward to your feedback in the comment segment. And help me reach out to smart investors and traders like yourselves by referring my video to your family and friends. Thank you for your patience and being with me in this video. Till we meet again in my next, this is Vijay Bhambhwani signing off for now. Have a very profitable day ahead. Bye-bye.